What's happening, Five Fam? Welcome back. I don't know if y'all noticed, but I got a new background. It says "Welcome Trainers" because welcome to everybody new that's joining Forex, or even if you're not new, you just want to come look at the YouTube videos to get a little bit more knowledge, or join the fam up in VIP. All is welcome because we all want to. At the end of the day, we all want to make money. So just threw that up there. Welcome trainers. I just want to go over a few things before I get into the video. First, number one, like, subscribe, share. You know the details. Leave a comment if you want to know more. Y'all know the details. But anyway, today is Monday. Yesterday, I'm just gonna run some numbers. What's going on in our VIP right now? Today is Monday. Yesterday was Sunday. I had sent out between then and now, a total of 9 trades. So far, all seven hit take profit, no losses. All 7 hit take profit, no losses. Take profit 1, anyways. So if you would have took profit at take profit 1, you would have been in profit on all those trades. Some of them went to take profit 2. Shoot, even some of them went to take profit 3. But I'm gonna open up MetaTrader 4 right now, and I'll show y'all. And the only 2 that didn't hit take profit yet is because, well, actually 3, because they're currently running. Hold on, let me cover this. As y'all can see, let me see if I can see that in the video. Yep. As y'all can see, that's what I got up right now. I called these trades out also in my VIP. Go to settings. Wait. Go to settings. So I can show you a real account. Click on back to trade. See, same trades. No lie, man. No lie. So, just wanted to show y'all that. So you can say so far, shoot, we 9 for 9. If your GPP go our way too, shoot, we gonna be 9 for 9. And this is just Monday, so that just goes to show y'all like what y'all missing out on in VIP. But anyway, we'll get straight into the video. But anyway, we will go ahead and get straight into the video so we could learn on how to use proper risk management. And that, again, too, everybody defines their own risk management different. It just depends on how experienced of a trader are you. If you've been trading for a long time, obviously you're willing to risk more because you're more confident in your trades. But if you're just beginning, you really want to use proper risk management if you're just beginning, because if you don't, you're gonna end up blowing your account. Or if you want to use bigger allotted size than you normally do, just take my signals. And like I said, we're profitable every single week. You could take my signals and trust the process and use a little bigger of a lot size if you have the money to risk, the money to back it up. But if you going in trading these things by yourself and you want to learn the market by yourself, do it in demo. Like, that's the best way you could learn on your own, is to do everything in demo. And if you find like your own strategy and want to back test your own strategy, do everything in demo over and over and over again until it's like you hitting consistently. If you see that at the end of the week that all your trades are more profitable than your losses, then you good. So we gonna go ahead and switch into computer mode so I can show y'all exactly the lot sizes, how much you'll make at this lot size with this amount of pips, and also how much you could lose and blow your account. So I'm gonna kind of show y'all the do's and don'ts. So without further ado, let's get into it. All right, y'all, computer mode. Now, what we're looking at right now is your GPP, and I'm using this just as an example. So we're gonna base this off of a trend line strategy. We see a trend that's happening, that's going on within the hour time frame. So we're gonna go to pip valve calculator, currency pair, euro GBP. The trade side, let's say we starting off with a $1,000 account. Well, before we even get into that, let's discuss risk management, the proper risk management that everybody wants you to trade. So say if you have $100, you want to trade with a 0.01, so bare minimum. That's what you want to trade with. If you have $500, then you could go to a 0.05. If you have $1,000, then you could trade with a 0.10, because you're only risking 1% of your account. So that's why they want you to go with the smallest lot sizes, so you're not risking much of your account. But the bad thing about that is if you starting off with a $1,000 account, it'll take you literally forever to grow it with a 0.10. I mean, but also you could have, if you want to grow it that way without using bigger lot sizes, you could just add positions, 0.10s, like two to three positions that'll equal your 0.30. But they still don't even recommend that. They still recommend going with one lot size only, 0.10. But when you get more experience, and there's always a reason for that, is because since you're not risking that much, and if you're new, then if it's a loss, it's not that bad of a loss. And if you win, then you're not really winning that much either, but you're still going to be profitable at the end of the day. And at the end of the day, that's all what we want, is to be profitable. So only when you become an experienced trader, I recommend that you use bigger lot sizes for smaller accounts. So say if you have a $1,000 account, if you experience, like for me, I'm just speaking on myself. Like, I'm not recommending anybody to do this. I'm speaking 100% upon myself. With a $1,000 account, I'm doing 0.25s, max 0.50s. Sometimes if I'm feeling like real good, I'm doing 0.75s. But I rarely do 1.00 lot sizes with a $1,000 account. Like, I'm usually doing like 0.50s and 0.25s. And if I'm seeing that the market is like really volatile and it's going my way like super fast, I'll add a position into that and then take profit off of those positions. So that's another way you can do it also. It's just that you have to get your own feel of the market. And once you get your own feel of the market, I mean, you could be straight. You could be good to go. So we will get back into calculating pips. I want to go over some do's and don'ts. So basically that kind of goes back into what I was talking about earlier. Don't chase after a trade. That's the number one thing. Do not chase after a trade. For instance, you could blow your account super fast. Say if you lose a trade, but then you start seeing it go up back your way. So you want to get back in because you want to try to hurry up and get your money back. But then it flips the other way and it just keeps continue going down. Then you lose out again. So then you think, oh, since it keeps going down, I'm gonna get in for a sale. You get in for a sale. It goes down like 10 pips, then it flips back the other way and goes up to like 50, 60 pips and knocks you out, blows your account just like that. Just like that. Just that easy. If you get aggravated and you're not patient and start to run after trades after it hits your stop loss, blow your account super quick. I've done it in the past. I think everybody has done it in the past whenever they're first starting, because you're expecting, oh, I want to make money real fast. I want to make money quick. And that's the thing. You can't go into this market thinking, I need to make a quick buck. Like, you have to be patient. You have to. And patience is key. As long as you're patient and you're making consistent profit, your money is going to keep getting higher and higher and higher. And you could put those bigger lot sizes in where you could be making $300, $500, shoot, $1,000 a day. Once you get confident enough in your trading, and once you have a big enough account size, you will be a lot more profitable, and things will be a lot more easier for you. Because if you in a trade with $1,000 account, and you got like 3 or 4 trades with 0.75s, and they all pull back like 30, 40 pips, like MT4 is just gonna start pulling you out of those trades, and you just gonna start losing like back to back to back to back to back, and you'll just blow that account. So number one, do not chase after a trade. Let it hit your stop loss. It hit your stop loss. Go into another trade. You're done with that one. Leave it alone. So for the trade lot size, so we're gonna go to Euro GBP, right? Trade lot size, we're gonna use let's say we have let's go over the $1,000 account. Let's say we have $1,000 account, right? Let's say you go in with a 0.25 on $1,000 account, and you're trying to get, let's say you're trying to be safe. You're trying to get 20 pips. So you're trying to get 20 pips. You're trying to get 20 pips to make about $65. Make about $65 right quick. So we're gonna go to Euro GBP right here. You see a trend in the market, right? You draw your line. So let me see. Let me actually play this out so y'all could see. So you start drawing. We cut it right here. So you see a trend in the market on an hourly time frame. You draw your line. You see how it's starting to go like within a diagonal position. So you try to find the support on where it's bouncing off of, and coming back up. You're trying to find that support. So you're looking for that support where it hits down right here. And then you draw the line right here because you see how it hits off right here. So you basically go off of this line right here, right? And you're waiting until the candlestick hits that line again. Then you go get in for a buy. So let's see how this plays out. We're going to go ahead and press play. Make it speed up a little bit faster. A little bit faster. Okay, bam. Right here. It hits the line, right? So you get in for, as soon as it hits this line, you get in for a buy. So we will get our ruler, we'll measure it by 26 pips. By 26 pips. But like I said, we taking profit at 20 pips. So we didn't took our profit already, right? So we press play again. So we waiting for it to come down again to hit our line. Bam. Hit our line again, right here. What is that? Let's see. Let's go up right here. What is that? 26 pips. We taking profit at 20 pips, like I said. Pip value calculator, it says that $65, so we just won $130 off of those two trades. So let's play again. Bam. So it hits right here. You see it hit right here. And as soon as it hit, you get in for another buy. But this time, like I said, greed. You like, oh, shoot. It's going to keep bouncing off that line. I'm going to go in with a huge lot size. Shoot, I'm going to go in with a 0.75 lot size. Because it happens. Happens all the time. You get super confident. You're like, oh, I'm a master now. I know Forex. So I'm going to go in with this. I'm going to bet it all. Because I know what the market's going to do. So, wait. Okay. So we go in with a 0.75 lot size, right? So, and then we don't set a stop loss because we feeling confident it's gonna go up. But then we see that it's going, and that's another thing. It's important. Always set a stop loss. Always have a stop loss, and let it hit your stop loss. So we thinking it's gonna come our way. It's gonna go up. So we press play, right? Nope. Down. Goes all the way down right here, and we like, man. Nah, but it got to come back up. So it starts coming back up. Then we think, oh, right here, we thinking, oh, it's going to come back up. So we stay in. Nope. Drops. Keeps on dropping. Then it tricks us again. So you staying in thinking that is buying, it's coming back up. You see like this, it came this low before, so it's coming back up. It got to come back up again. So we press play. Let's see what it does. Consolidates, 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 consolidates. Speed it up a little. Look at that. Look at that. Look. Oh my God. Just playing mind games on y'all. That's what it's doing. It's just playing mind games on y'all. So it goes, and then this is where it's at right now live. So it goes all the way down right here, consolidates, consolidates, consolidates. And let's see how many pips that is. It probably wiped your account out if you stay, because you thinking that it's gonna come up, but it just stays down that whole time. That's 131 pips. You stayed in this trade to make 20 pips, but lost 131 pips. So let's put that in right quick. You didn't blew your account. They would have took you out probably at 100 pips. Oh yeah, most definitely. You didn't blew your account. Your account gone. Blew your account off of that one trade. That one trade. That's why it's important. Set y'all stop losses. Let it hit y'all stop loss. Don't get back in the trade. Look for something else, or wait for another signal if you're in a signal service. Like, leave it alone. So that's it for that. So now y'all know the importance of risk management. Why you have to be patient. Use small lot sizes. Wait for your account to build up before you can set a bigger stop loss and risk more money. Because if you're not careful with this, man, especially if you're new, you'll blow account after account after account after account, and just know when to take profit. Don't be greedy. As soon as you start to become greedy, that's when the market is going to start kicking you out. So that's about all I have to really go over with y'all. That's pretty much how I look at, risk management, lot sizes. I showed y'all an example of what can happen. Number one thing, like I said, remember, let it hit y'all stop loss. Don't chase after the trade. Get out, search for another trade. But that's about it, man. So I hope y'all like this video. Please like, subscribe, comment, and share it, man. Oh, if y'all, like I said before, if y'all need anything, if y'all have questions about anything, on Telegram, send me a message on Telegram. Ask me about anything. I'm here to help. Like I said before, at the beginning of this video, we killing it up in VIP. So if y'all want to make consistent bread, I suggest y'all join VIP. But anyways, y'all stay blessed. Till next time.